Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into Savara Inc's 10K, their annual report, and let me tell you, it's not exactly a beach read, but someone's got to do it. Good news for Savara, their pivotal Impala 2 trial data looks promising. It's like they finally found the hidden treasure after years of digging. But will this translate to actual money? Let's decode what's happening. First, some basics. Savara is a biopharmaceutical company laser-focused on rare respiratory diseases. Their main program is MLL-Brevi, an inhaled treatment for a rare lung condition, APAP. The company just finished its phase 3 trial, so all eyes are on regulatory approval. As a quick reminder, this Form 10K is basically an annual deep dive into a company's performance. It covers everything from their business strategy to potential risks and, of course, the all-important financials. Savara's strategy hinges on their ability to get MLL-Brevi approved and successfully launched. They're also working on ensuring their manufacturing can handle commercial scale production by establishing backup manufacturers. Let's dive into their clinical trial. The big news is the Impala 2 trial, designed to test how well MLL-Brevi works compared to a placebo. The primary goal of the trial, change from baseline to week 24 in diffusing capacity of the lungs for carbon monoxide, was indeed met. The company also demonstrated the durability of treatment effect at week 48. This is a measure of gas transfer in the lungs, improved significantly with MLL-Brevi, so it's not just hype. The drug appears to really do something. There was significant improvement in SGRQ total score. This clinical benefit is super important to patients, and it also helps Savara in the long run with future sales. The company is now marching through the regulatory approval process. They've already started submitting their biologics license application to the FDA, and they're hoping for a speedy review. They've got Fujifilm as a second source drug manufacturer. This is a smart move, as relying on only one supplier can be risky. Now it has fast track and breakthrough therapy designations from the FDA, which can help speed up the review process. That's the good part. They also have orphan drug designation, which gives them market exclusivity if approved, but it also comes with some complexities. Now let's brace ourselves and talk about the risks, because there are always risks. Savara's fate is pretty much tied to MLL-Brevi. If this drug doesn't succeed, the company is in trouble. They've been losing money for years, and they expect to continue losing money for the foreseeable future. This is common in biotech, but it's still a big concern because it means they'll need more cash to survive. They have debt, and those loans come with strings attached. If they don't meet the terms of their loan agreement, things could get ugly fast. They're trying to create a backup supply chain, but if the new manufacturers can't produce the drug correctly, then all bets are off. Here's a weird one. MLL-Brevi has orphan drug designation, but if a competitor gets orphan drug exclusivity first, then they are in trouble and cannot market their product until the other product exclusivity expires. Savara is non-accelerated filler. That means they are required to provide less detailed and more frequent updates. The aggregate market value of the voting and non-voting common equity held by non-affiliates of the registrant was approximately $544 million as of June 30, 2024. Let's check some key numbers. They've got $15, they've got $15 1 million cash and cash equivalents. It is essential to keep that in mind. There is a floating interest rate on one of their loans. It's not a huge amount, but rising interest rates could still squeeze their finances. For those interested, this includes the actual documents, the financial statements and schedules, plus all the juicy contracts and legal agreements. They don't anticipate having to claw back any incentive-based compensation from executives anytime soon. That's at least good news for now. And this is what Savara paid their auditors. The stock price is still volatile, as they are in a stage where everything hinges on FDA approval. To read now, let's move past the numbers and see what I think about all this. Savara is a company placing a big bet on MLL-Brevi. The phase 3 data is encouraging, and the company is moving towards regulatory submission. However, the company has incurred significant losses since its foundation, and the risks are real, and a lot depends on things outside their control. The key for Savara in the coming months will be not only navigating the regulatory process, but also managing their cash and securing additional funding. This is definitely a high-risk, high-reward situation. If MLL-Brevi gets approved, it could be a game-changer for the company and a lifeline for patients. But if it stumbles, Savara is in for a rough ride. The journey is far from over, and thanks for watching, and please subscribe and like our video.